Hey folks, this is Ryan Mallory for SharePlanner.com. Today is December 5th, 2013. Alright, S&P down 5 straight handles here with us testing the 20-day moving average as we speak. Now, just like it's been the last 2 days where we bounced off of it, it is important for the S&P to maintain that level, because that is historically, or when I say historically, the last 2 times we've tested it, so I guess that's history at least, it's bounced. Okay, so that needs to happen again here. If it doesn't happen today and we close below that 200 or 20-day moving average, especially if it's a decisive move below the 20-day, then I'm probably going to get a little bit more concerned slash bearish towards this market. Now, as it stands right now, we got about 7 open positions in the portfolio. I just added another one just about 30 minutes ago, and so I'm not expecting it per se to give up this rally. However, I have to be cognizant about anything that can or will happen. And so the 20-day moving average, if that does happen and we close below it, then that's something we're all gonna have to consider, booking some gains in current stocks. Now we got some positions like open in LVS. And usually I don't double up on one industry, but I did this particular time around because there were so many good setups in them, and I could have gone three setups long on this casino industry, or the resorts and casinos. But this LVS, I mean, it was just, the setup was immense in this thing. It was solid, and we broke out really hard yesterday on strong volume. We're doing the same thing again today, pushing higher despite the market being down about 4 or 5 points. This thing is still surging ahead with no give in sight. Now you take its competitor MPEL, we're long in that one as well. So we got about 10% in gains between these two stocks, and they've been doing really good. But you can see there's really no letting up yet in these casino stocks, and until that happens, we're just going to keep raising the stop loss and let it force us out of the position with whatever profits we have left. But yeah, right now we have about 10%. So I mean, I'm going to be raising these stops in these two names after this video, and probably have about a 2 to 3% cushion in them, and just see how much higher they want to go. I mean, especially if this market wants to rebound off of this 20-day moving average, which quite frankly, when you have 5 straight days of selling and the market is only pushing or pulling back about a little more than 1%, that's not a good sign for the bears. They don't have control of this market. The bulls aren't letting it up. They're just giving them a little bit of room to play around with. But I think the dip buyers are probably going to come back in and push this market back up again. And it's sort of like what I put into the morning trading plan. Each morning there's been this comment, probably for like a half year, that I've left in there because it rings true. There's no reason to change it or take it out, and that is, the market's not going to care about the news or anything else. It's strictly concerned with the Fed's involvement in the markets, and right now, while it's a heavy involvement, it's going to remain bullish for the duration of that time that the Fed is in the markets. And there's really no reason to get heavily short long term or heavily bearish long term on this market, as long as the Fed keeps pumping the money into it. So I like bear markets for the purposes of trading. I think it's a lot easier to make the gains quicker. So I would welcome a bear market to trade in, but we don't have that right now, and there's no, despite my wishes, what I would like, I can't impose that on the market, and doing so will only kill my capital. So that is not something I'm willing to do or consider. So for now, as long as the market's trading up, I'm going to trade up with it. I'm going to trade long, and there'll be times, sort of like what we saw in 2011 was probably the last significant pullback that we had, when it felt like the markets might be trying to undergo a financial collapse, back in that summer. That was probably the last true time where we had an extended period of selling that was brought about in this market that you could really make a lot of money off of shorting stocks in. So until we get some similar conditions like that, it's hard to really get ultra bearish. I mean, when I get short stocks, I'm not getting a lot of I'm not shorting a lot of names. I'm getting, you know, most of the time like 2 or 3 stocks at once, and usually I'm hedging that against a couple of long positions just to you know, avoid being squeezed out of anything. So be patient with this market. For now, the only trade out there is to keep on buying, I guess, as much as I hate to say that. Um, if we can break below this 1777 on the S&P, let me pull this up again. That would result in a break of the November 20th lows. So if we can break that, then we might have something cooking. Now we came pretty much tested it yesterday. I think we came within a point of testing it on yesterday's lows. I would consider it for the most part a test. And you saw the dip buyers came in really strong. I'm kind of looking for a similar move today, not maybe down to 1777, but at least for a buy off of these lows that takes us back above the 20-day moving average. So let's look at Apple too. This stock, I really thought it would probably be, when we got this candle right here, that candle got me spooked enough to where I got out around 554. So it didn't even take the full candle for me to get spooked out of it. When it was at 554, I had raised my stop loss, got stopped out of it. Took about a 6-7% gain and moved on to the next trade. Don't regret it. Stocks can do whatever they want after I get out. I have to base my decisions on the most information at hand that I have at that current moment. I don't know what it's going to do the next day or anything else. So I have to be aware of trading not based on what I like to have happen, but based on the price action that has been given to me and the knowledge that I have at that time. On this particular day when I got out of Apple, you can see the volume was really strong. It was it had soared extremely high in just a 3-period day, more so than what we had seen in any three-day period since, you know, maybe August or so. And you can see in August, you know, we gave back some of those gains eventually. So when I saw this candle here, we made new highs on the day and then just started giving it all back. That's where I decided, okay, enough's enough. Let's go ahead and book the gains and move on. Now, of course, I would have been far better off had I stayed in the stock when you're looking at it from just an individual stock perspective, because the next day you had this crazy gap up that created a bullish kicker. And those things, they don't happen that much, particularly in a big name like Apple, but that is a significant bullish candle right there. It's called a bullish kicker because it's after a solid down day where it gaps above the opening price from the previous day and forms a large up candle. It's tend to be pretty bullish, and yesterday we had some consolidation followed by, you know, a doji after a nice gap up as well. So you know, it looks overextended. I'm not going to get back long in it by any means, but it's hard to say too that 535 is likely to still happen anytime soon. So for now, I don't see a real edge in trading this stock, and would just, you know, hold off until it shows otherwise. What else do I want to cover here? MGM, that was another casino stock doing pretty good today. I think out of those three that I've talked about, MGM, LVS, and MPEL, I think those three stocks, MGM is the weakest, which is why I didn't get. In fact, it had been on my short watch list for a while simply because there's a lot of resistance here at the $20 level, and so I have a low level of confidence that I can push through that. But LVS has done really good, and so I'm not sure where I'm going to raise the stop at, but I want to do it to enough to where I'm protecting the majority of my gains, and the same thing with MPEL. With the NASDAQ here, let's take a quick look at it. There we go, if I can get the symbol up. The pullback doesn't look as harsh in the NASDAQ as it does in the S&P. It looks like a bull flag, quite honestly, where it looks like it wants to possibly break out today of that bull flag. So that bodes very well for the NASDAQ and for tech in general. We got a position in ADSK that we're up nicely on so far. We got on this breakout for 2 days now. It's been breaking out nicely and consolidating a little bit, so I don't see anything to be nervous about in ADSK. So you know, if you're long in that position, I'd definitely, you know, keep holding on to it, and just sort of like the LVS and MPEL trades like that I also have. just move up the stop loss and protect the gains. Don't let these profits turn into losing positions. You can't allow that to happen. So let's see. You know, I've been getting a lot of questions about gold and silver lately, so I'll cover these things real quick, and then we'll wrap it up with that. I don't like gold. I don't like silver. I think it's been overhyped over the years. You look at what it did during 2008 when the market sold off. Everybody looks at gold and silver as being these commodities that will save the day for you when the financial markets, you know, blow up and everybody's creating mass mayhem in the streets or whatever, you know, the story that people like to tell is. They think that by clinging on to gold and silver that somehow that they will have, you know, unfettered wealth because the price of gold will go up to $10,000, like you know all the commercials like to sell you on the belief of, and then they buy silver because silver is a cheaper commodity and you can technically own more of it. And so you got like gold and you got silver just, you know, tanking. And I really, somebody was asking me, what do I think silver and gold's fair value? I think silver's fair value, or where I think it should really come back down to, is somewhere like the $11 to $12 range, and then for like gold maybe like $700-800. I think their price levels at these at current price, I think that's just crazy. And you know, all you have to do is look at 2008 and see that when the markets crashed, so did these things. So don't put your hopes into it, and please don't put your hopes into Bitcoin because God knows what the heck that thing is. So excuse me, I got a little cough, but that I'm getting over. But in any case, I'm going to wrap this up. If you guys have any questions, feel free to email me, ryan@shareplanner.com. Big welcome to all the people who have been subscribing to our newsletter, and hope you find it as much value as everyone else has been able to find it to be. And you know, I'm in the chat room all day long, so if you are a member, then feel free to hit me up with any questions, thoughts, concerns that might have, and if you're not, then consider subscribing or just hit me an email, and I can be glad to answer any questions or concerns that you might have there as well. So y'all take care, have a great day, have a great weekend that's only 2 days away, and eventually Christmas will be upon us, and have a Merry Christmas too. So God bless you all.